On today's episode, I am going to take a look at 5 stocks that I believe are great investments for me right now. And the way I chose these 5 stocks is I'm looking at their fundamentals, the overall market that they're hitting, the type of growth they're expected to see, as well as their current valuation or stock price. So like many of you, every single week I put money into the stock market. And this money I want to put to work. I want it to beat the overall market, right? I want to do better than the overall market. So I'm searching for investments to put that money. Sometimes it might be a new position I'm opening up, or sometimes I might just be adding to increase my overall concentration in one of my investments. So this week I picked up 5 stocks, and today's episode is going to be broken down into the following. First, I'm going to take a quick look about the company and their revenue breakdown. Where is that money coming in? Next, I want to take a quick look at their growth and balance sheet to see if they're fundamentally stable right now. And then for each stock, I'm going to talk about my pros and cons, some of the risk, and some of the great things about investing in these companies. Like always, if you are new to my channel, if you're a long-term investor, if you'd like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for all the support. Like always, you can get in contact with me in YouTube comments, on Twitter, on Twitch live streaming, on my Discord channel, which is free to anybody that wants to join, and at josenaharo.com. Remember, everything I say here is just my opinions. I am by no means a professional, so none of this should be taken as advice. Now that we got that out the way, let's get started. And before we start, don't forget to hit the subscribe button and the thumbs up. It helps the small channel out so much. Thank you. All right, guys, like I mentioned, today I'm going to talk about the 5 stocks I purchased this past Friday. And let me know in the comments below, guys, what are some of the ones you purchased? It's great to share with the community. Also, if you guys want to know when I buy a stock, feel free to join my Discord channel. I post it there every time. And like I've mentioned, it's free for anybody that wants to join. Next, check out that Webull link I have on the pinned description or on the comments. If you sign up and follow the instructions, we can both get a free stock. And what's better than a free stock? So make sure to check that out. Finally, if this video gets over 150 likes, I will be doing an episode on my portfolio. And I've been I want to say it's been doing amazing compared to the overall market, and I would be sharing some of my tips there and what are my current position size. So if this gets over 150 likes, that would be the next video I do. All right, so the first stock I bought is EA Games, and this is ticker EA. Right now it has a market cap of $36.8 billion. If you guys don't know, I'm very bullish in the overall gaming industry. About 20% of my portfolio is in the esports realm, just because I see the potential growth here from mobile gaming, cloud gaming to live streaming gaming. So all these types of markets I believe are going to continue to see future growth. So a lot of the stocks I bought today have to do with gaming, but they all are in different aspects of gaming. One thing I want to show you guys is this pretty cool list that comes out from Q4 of 2019 that shows some of, and this comes from Newzoo.com, that shows the biggest gaming companies right now based on revenue. Number 1 is Tencent, number 2 is Sony, number 3 is Apple. A lot of people are asking, how is Apple number 3? The amount of money they collect from their app stores, application, the fees these gaming companies pay them to do it, or when someone makes a transaction there when playing a game, it actually has pushed Apple to be number 3. Number 4 is Microsoft, number 5 is Nintendo, 6 is Google, 7 is Blizzard, 8 is NetEase, 9 is Electronic Arts, EA Games, one that I just took a look at, I'm about to take a look at, and number 10 is Take-Two Interactive. And we can see another one that I thought was pretty cool. You guys know me. I'm very bullish on Sea right now. Sea is actually the number 20th biggest gaming company worldwide as of the Q4 of 2019. I'm pretty sure it's probably even pushed itself a little bit higher right now with how great it's doing. And number 25 is Zynga, one I keep hearing a lot about. So maybe this one has been increasing a lot. Maybe one I might take a look at later on. But most of the companies I bought today are within this top 10, and we've seen a huge correction right now in a lot of these stock prices. And I thought it was good to show you guys who are some of the biggest boys, right? Not many people expect, for example, Apple. Not many people expected Tencent to be number 1, but Tencent owns so many positions, and a lot of these are ones I bought in the previous weeks. I bought Tencent, I think about a week ago or 2 weeks ago. Microsoft. I've been buying Nintendo from time to time. Google, and I think those are the other ones. I know Activision is, but I don't think I purchased it I haven't purchased it recently. But that's just because it's an overall big position in my portfolio already. All right, so now that we're back at here at EA Games, let's take a look at 6 months since it peaked somewhere in August 6th. The stock price right now is down about 13.2% from that peak. So it's definitely had a nice pullback. We saw there was a nice overall stretch in the overall market. So we got that pullback down, which has kind of given us better valuations on most of these stocks. So where does EA Games collect most of its money? So EA Electronics, EA, gets in its most recent year, it had about $5.5 billion of revenue in the fiscal year of 2020. That 5.5 comes from about 1.9 comes from Full Games. This is when they sell the game, the actual game company, the actual game to a company. So when you buy FIFA 2000 and whatever, once you buy that game, that goes into the Full Game. Most of it, about 3.7 billion out of that 5.5, comes from live services and others. And this is like DLCs, any type of other buy in the game once you have the game. Loot boxes, subscription bases, if any other games are subscription based. They do have a few subscription games. So all that other services outside of the full game come from there, and that's the biggest portion. They also gave, in their most recent earnings, they gave estimates of upcoming revenue, and they estimate for the fiscal year of 2021 to be $5.6 billion. To me, I think this is actually undershooting their estimates. They're being very conservative. With the new consoles coming out, with still people staying at home and the increase of gaming demand, I do believe this revenue will be a lot higher. Now that we saw where their games are, where that revenue comes from, let's take a look at that future growth. Annual forecasted growth for EA Games right now is expected to be 6.3% per year on average for the next 3 years. I do believe this might be a bit of an undershoot. At the same time, though, EA Games is already a big company, so revenue growth is not expected to grow dramatically, right? So this is the risk. EA Games is more of like a stable company compared to some of the huge growth companies that I see. But again, I still believe the overall market is leading here. So sometimes I feel like analysts might be being a little conservative or undershooting what the true revenue growth for these companies are expected to be. Right now, EA Games is profitable and is expected to continue to be profitable. Now let's take a quick look at their balance sheet. Their balance sheet looks pretty strong. They have about $6 billion of cash and cash equivalents, and less than $1 billion of debt. So this company is profitable and it has way more cash than debt. So this balance sheet is pretty strong. So let me take a look at what I like about EA Games. The first thing I like about EA Games is, yes, they've just released some amazing games. For example, this new Star Wars Squadron that just came out has been doing great. They are pretty strong in the sports realm with FIFA, with NBA, with NFL, and these are ones that I believe in the future can be very strong in the esports market right now. Even though right now in the esports market, I think Activision is one of the leaders with some of the games. They're doing really well there. I think EA Games, with the type of catalog it has, it can head to that market really, really quickly and really strong. They also have a lot of other games that have great backings, like The Sims, Apex, which is like a Fortnite competitor, and those are doing really well. They're also pushing onto content creation, which is I think pretty interesting. I don't know how well it's gonna do for them, but they're actually making, since The Sims has such a strong backing, they've actually made a TV show about The Sims Spark, and it's on TBS. I'm not sure how well that's gonna do, but again, it just shows the overall that this company knows the type of following it has and is trying to increase its content creation. I'm a huge Star Wars fan, so Fallen Order and Squadrons are amazing. Unfortunately, doing these YouTube videos, I barely get any time to game. Some of the great things, right, about EA Games: the overall titles it has, the way it's going, the overall growth in the market. What are some of the risks about EA Games that I believe are right now? The first thing is, just as we saw with that growth, its growth might be expected to be a little bit slower than the other gaming companies or other growth stocks that I normally take a look at. So their growth is a bit lower. The second thing is there's sometimes a lot of backlash on EA games and how they do like loot boxes and how they release certain games that maybe players are not really looking to play. So there is some backlash on EA games right now. And I do believe that has pushed the stock price down. One thing I forgot to mention is with the upcoming consoles coming out, that's definitely going to push this revenue up. They have a new Need for Speed coming out, the new sports games. I'm pretty sure a new Battlefield is going to come out. And with the recent Star Wars game, it's definitely a great time for me to enter this market. All right, the second stock I'm going to take a look at is not really a gaming stock. This one is Facebook, ticker FB for all my podcast listeners. And since the peak in September 2nd, this stock price has corrected about 13%. Right now, market cap for Facebook is about $753 billion. If we take a look at the revenue breakdown, this most recent quarter of 2020, they collected about almost $18.7 billion of revenue. Over 95% of this company's total revenue comes from advertisement. The other, not even, I want to say, probably like 2% comes from other, and this is stuff like their VR hardware and any other small segments that Facebook might have, but most of their revenue comes from advertisement. And one thing I do want to show you guys is their revenue has continued to increase dramatically. One thing to keep notice, quarter four is always the strongest for most companies like this, even most video game companies and anybody that deals with advertisement, because that's when everybody's trying to sell everything, right? During Christmas, during the holidays. So quarter four is always the biggest. We can see here quarter four jump, then it drops back down. And that's what tend to happen this quarter as well, right? Quarter one is a lot lower than quarter four, but overall, each quarter is better than the quarter of same time last year. So we're seeing strong growth here in revenue in Facebook. Facebook is still seeing huge growth in their monthly active users. Here, family monthly active users, they're continuing to see a trend. So more people are still using their platforms. In one of their platforms, and their main platforms right now are Facebook, our WhatsApp, and our Instagram at the moment. So let's take a look at Facebook's revenue growth. For the upcoming 3 years, on average, Facebook is expected to grow 17.7%. Anything over 15% is considered a decent growth company. So Facebook, to me, is still a growth one. And it's already profitable, which is great things. If we take a look at their balance sheet, Facebook has one of my favorite balance sheets next to Google. Right now, they have about $60 billion of cash and they have no long-term debt or even short-term debt at the moment, minus I think maybe some leases of places, but this is a very, very strong balance sheet. What are some things I like about Facebook? Facebook right now, it makes such a huge money from advertising because that's where the eyes are going. And they're continuing to innovate to make their eyes stay there. One of the most recent things that I really like about Facebook is they partnered up with Microsoft's Mixer. And now Facebook gaming has become a true platform where I'm personally seeing a lot more gamers moving into Facebook gaming. So it's increasing there. So now that you have more eyes using Facebook gaming, now you're going to have more places to put advertisement. You're going to have more people viewing advertisement, and you're going to have more companies paying for that advertisement. So they're making sure that the eyes stay on them. They're also doing pretty great moves with e-commerce type market where they're making it really easy for people to open up their own stores on Facebook and then be able to sell there or be able to sell through some other platforms like Instagram. Now, if you're looking through a post and you get an ad, you can even order food or anything through Instagram, which I think is a really great move that they're doing. So those are some of the things I like about Facebook a lot. Definitely a very strong balance sheet, that they are profitable. Revenues are still going up. What are some things I don't like about Facebook? And these are some of the risks. To me, the biggest risk right now is a lot of this big talks with the government. I don't know, right? I'm not a law expert, but that creates some volatility, right? If Facebook in the past, I think for the past 2 years, has always had to pay some form of fine to some form of government because of some form of antitrust or some form of just legal matters, and that cuts their earnings a bit. So I do believe this is something that's gonna continue to happen, and who knows? At the moment, just that alone brings a lot of volatility and a lot of unknown risk of what any type of government is willing to do to something that they believe is such a huge impact to the human, to everything from elections to everything else, right? So that brings huge volatility to the market, and I believe that's, to me, the biggest risk. All right, the third stock I'm going to talk about is Huya. This is ticker HUYA. This, if you guys, right now is sitting at $25.79. And since its peak, it's down about 12% right now. It currently has a market cap of $5.7 billion. So it's very small compared to the other two. So if you guys don't know Huya, Huya is also one of my tier 1 stocks. EA Games is a tier 3, I believe. Facebook is a tier 1. If you guys did not know, Huya is a tier 1 in my stock. And tier 1s are my biggest positions and the ones I believe are going to be great in the overall market. So Huya is a live streaming platform in China. They, if you guys know about Twitch, if you guys know YouTube gaming, if you know about Facebook gaming, Huya is the Twitch of China, and China is the biggest country right now due to video games, so it's a great place for this to be in. It's backed up by big company like Tencent. Tencent owns over 50% of the voting rights for this company, which any company backed up by Tencent is one that I feel a bit more comfortable owning, especially here in the China market. So Huya, for their most recent earnings, which was Q2 on August 11th, their revenue increased 34% compared to the same time last year, making about 381 million American dollars. So it's still a very small company in regards of revenue, but that's why we have such a low valuation on the company, about $5.8 billion. That revenue comes from two markets. The two segments that it collects its revenue is the live streaming market, and live streaming revenue increased by 33% compared to the same time last year, and it makes up almost 95% of this company's total revenue, which is $363 million come from live streaming revenue. And this is, for example, they have like paying users to use their platforms. And if you guys have ever used a streaming platform, you can send gifts to the person you're watching stream, right? You can give them donations, you can send them gifts. Whenever you send them gifts, the company like Twitch or like Huya, they take a percentage of that revenue. So that's where that live streaming revenue comes from. The other small portion, which is close to 5%, comes from advertisement and other revenues. And these are any advertisement they place within these streams. That makes up 18 billion of that 18 million, excuse me. That makes 18 million out of that 380 million. So like I said, about 5% comes from advertisement and revenue. We're seeing that strong growth. Now let's take a look at their future growth. Huya is expected to grow 17.3% on average for the next 3 years. Strong growth company. I do believe it might grow a lot faster, but it's still showing that this is definitely a true growth. If we take a look at their balance sheet, they have about 10 billion Chinese yuan, I believe. And they have no debt at the moment. So this is a very strong balance sheet as well. So now let me talk about what I like about Huya. Huya to me is the perfect example. If you guys know the story of the gold miners and the pigs and the people that sold these pigs. Not every single gold miner made money. Most of them lost money. But the ones that made the money were the people that sold the tools for those gold miners. And this is what I'm super bullish in things like Facebook and in terms of Huya. It doesn't matter who the leading gamer is, right? It doesn't matter what game, what company is making the best game. They're going to come use Huya or any live streaming platform to stream their game. And Huya is that tool for those gamers. So that's why I'm very bullish in Huya. And we're seeing this strong growth. And obviously with such a small market valuation, for those that don't know, Twitch right now, if Twitch of Amazon, what's its own valuation, I think it has, Twitch has about a $15 billion valuation right now. So if this is, again, right, Huya is in the market with a lot more population, a lot more gamers. Another thing that many people might not know is Huya owns this thing called Nimo TV. Nimo TV is a live streaming platform in Latin America, like Brazil, and it's doing amazing. It's I think it's I think the number 2 highest streaming platform in the world, only coming second to Twitch. And it started in 2019. And let me say this: Huya right now is being owned by Tencent. You know who else owns Tencent? Sea. And you know with this market, with this partnership, Sea is allowing who Tencent is allowing Sea to license some of its games. Then Sea, for example, is using Nemo TV to enter that Brazilian country, to enter that Brazilian market. It uses Huya's live streaming to push some more of the games that Sea has and that Tencent has. So this overall partnership that they have right now, I think, is amazing, and it's gonna dominate the overall gaming industry. Some of the things that are risk between Huya, to me, the biggest thing is this is a Chinese company with China tension with the United States, and just overall, the overall amount of fraud that we see in countries like that. It's definitely a bad thing, and I can understand why some people are hesitant to get into Chinese companies. One, I understand that risk is definitely a major risk, but for that reasons, I control my management by only having X percentage of my portfolio in international companies. At the same time, it's not going to scare me off when I see a company like this in the market I believe on. I'm definitely going to buy in. But that to me is the biggest risk I see with Huya, and why makes it such a very volatile stock. The fourth stock I bought was NetEase, and this is another gaming company. If we take a look at top publishers, this is the number 8 gaming company. It actually beats Electronic Arts, and it beats Take-Two Interactive. It's currently a bit below Activision. So we can see this is another big gaming company. It's unfortunately, not unfortunately, but maybe to some investors it might be unfortunately, it is also another Chinese stock. Right now the market cap for this is about $62.6 billion, and it also hits other markets outside of gaming. So first, let's take a look at total revenue. Total revenue for this most recent quarter was 2.5 billion United States dollar. Out of that 2.5, that grew 26% compared to the same time last year. We're seeing that crazy growth. Out of that 2.6 billion, about 2 billion came from online gaming services. And I'm going to show you guys some of the games that they have, and I believe it's actually pretty cool. Then another 100 million came from Youdao, which is their educational platform. It is actually its own independent company as well as own independent stock, but this is like the live streaming educational services. Then they have about 500 million in innovative businesses and others. But we can see a huge portion comes from online gaming. And let me show you guys some of the games they have. In the innovative business and others, for those that don't know, they have like NetEase Cloud Music, and they have like an e-commerce business targeting middle class consumers in China. But let me show you the games. Their games, most of their game comes from mobile games, which I believe is the biggest market right now. Not everybody has the money in all over these countries to buy a console, to buy a high PC playing game. Now that we're getting crazy AAA games on mobile platforms, I think it's gonna revolutionize the industry. And we can see mobile gaming revenues for this company is about 72% of total gaming revenue. Some of the online games they have here, unfortunately, these are Chinese games that I'm not too familiar with, but I know they have flag licensed PC titles with Activision's. They built a lot. They help Activision build some of the games, so they have some of the licenses for them in China. All the World of Warcraft games, the StarCraft games, all the Blizzard games, from Hearthstones, Diablo, Hearthstones, and Overwatch. These are allowed, licensed by Activision, and they're being collected revenue by NetEase. They have a lot of online games in the mobile games. I don't do many mobile games, but probably many of you might be able to see some of the games here. I've seen some of these pictures, and I for example, I think this one's really big. But in their licensed mobile, they have Hearthstone, they have Minecraft, they have football as well. So we can see they are very, very strong right now. So let's take a look at their future growth. Future growth for revenue is expected to be 12.6 on average for the next 3 years. This is, again, 15% is considered a high growth, so it's almost hitting the mark of a high growth company. But I do believe it might be a little conservative with the numbers right now and underestimating. I do believe the growth here in the gaming industry is one that will continue to grow as time progresses. If we take a look at their balance sheet, it's also very strong. They have about 96.2 Chinese yuans, billions of dollars, compared to a debt of 21.4 billion. So they have a lot more cash than debt. So let me take a look at what I like about NetEase. NetEase, again, in the market, I'm very happy to own the gaming market. It also has licenses with great games from World of Warcraft. Activision is not going anywhere. StarCraft, Warcraft, Hearthstone, all those are franchises that are still showing strong users. They're very strong in the mobile platform, which I believe is a market that I'm happy to own. A market that, like I mentioned, not many people are able to buy consoles or high playing PC games. The cloud gaming, the mobile gaming is a market that I believe will explode. What else do I like about them? I like how they're also hitting online education, even though it's a small portion, and they are also in the e-commerce and other innovative business. So they are hitting other markets, which make NetEase a very, very great stock for me. Well, what are some biggest risks? Very similar to Huya, since it is a Chinese company, a lot of volatility, a lot of uncertainties, but being backed up by somebody like Activision, right? Having the licenses from Activision of Minecraft, it kind of gives me a little bit ease of mind at the moment. The final company that I'm gonna take a look at is another Chinese company, and this is Doju or Doju, ticker DOYU. Right now, it is sitting at $14, and I'm happy I purchased these because these went up almost right after I purchased all of them. For example, Doju's at 4% up already. I purchased before, if we take a look, I purchased around 13 something. And again, all of these are ones I had, obviously. So these are just increasing my overall position size right now. None of these are new entries, it's just increase of position size. So I'm happy to do that. I'm always increasing my winners. Doju right now has a market cap of $4.4 billion, a little bit smaller than Twitch, than Huya. And let me tell you, this is almost the exact same company as Huya. It is also backed up a little bit by Tencent. And if you guys don't know, Huya and Tencent, Tencent is trying to merge Huya and Doju. And I do believe that merger will happen in the future, making the super streaming platform for Tencent, which is the monster which is the #1 gaming company, as we saw in Q1. It had Tencent, just to show, had a $5.2 billion of revenue on Q4 of 2019. The second one had $3.9 billion. So this one is about $1.3 billion larger than the next biggest gaming company, which was Sony. That to me is impressive. And Tencent is just doing smart right now with Doju, with C, with Huya, making that partnership with all those. This is a market I believe is going to continue to do well. So again, let's take a quick look at their earnings. Very similar. This is actually very similar to Huya in the way they collect revenue. Total net revenues were $354 million, so a little bit lower than Huya. Huya was 384. Revenues increased by 33% this most recent earnings. Most of the revenue comes from live streaming. Again, about 90% comes from 327 million comes from live streaming revenues. About 5%, maybe a little bit more, comes from advertisement and other revenues. That's about $26 million. So very similar to, if you guys understood Huya, you'll understand Doju. Doju right now, if we take a look at their earnings growth, they're expected to grow 18.4%. I think this is faster than Huya, but again, it is a smaller company right now, so you're expected to grow a little, even if you grow a little bit less numerically wise, percentage wise might be a lot stronger. So this is definitely a high growth stock. Balance sheet, very similar, has very strong. It has 8.2 Chinese billion dollars of Chinese yuans, 8.2 billion, and no debt. So this is a strong balance sheet. What are some, and let me say this, both NetEase and Huya are ones I only bought half positions, compared to EA Games, Facebook, and Huya are ones I bought full positions. Instead of buying a fourth full position, I ended up buying half NetEase and half Doju. And that's how I ended up doing this. So you could, just so you guys can understand how my purchases work. Things I like about Doju, very similar to what I like about Huya, except I am a little bit more bullish on Huya than I am on Doju. But I just wanted to diversify a bit and also grab some more Doju. Things I don't like about Doju is very similar to everything else. In the Chinese market, right now, that huge volatility. They do have the competition of Huya, so if this merger does not happen, I do think this will be a great second place, but Huya, I believe, will continue to dominate that market. So that's it for today's episode. I hope you guys enjoy it. These are always my favorite to do because I get to do a quick, very quick fundamental analysis on them. Again, if you guys, I do heavy analysis on them if you're new to the channel. So definitely check those out. I believe I haven't done one on NetEase or Dojo, but every other one I've done full analysis on. So if you guys like the episode, make sure to like, make sure to subscribe. It helps the small channel out so much.